Hey guys, welcome. In this video, I'll simplify order block trading strategy in 3 simple steps. First, let's explain order block and its distinction from candlestick engulfing pattern. So right here we have the bullish order block and the bearish order block. And in a bullish scenario, we want to see price retrace to the high, open or mean threshold and move all the way to the buy side. While for a bearish scenario, we want to see price retrace to the low, open or mean threshold and expand all the way to the sell side. Now let's look at how the order block is distinct from the candlestick engulfing pattern. Now look at this particular piece of price action right here. If I ask you where is the order block, you probably will outline a lot of order block right here. But going forward, this shaded area right here is the order block. Now looking at this particular slide right here, we can see to the left right here, this particular piece of price action is a 4 hours time frame, and to the right here is a daily time frame perspective. And right here on the daily time frame perspective, we can see that the order block is spelled out completely. We can see the high, the open and the mean threshold right there. But on the 4 hours, we can see that if the order block wouldn't be that simple, because of a lot of people would have seen this as an order block. They would have probably see it as a support zone to see price move all the way to the buy side. So the difference between a candlestick engulfing pattern and an order block is the concept and the idea behind it. This right here again can easily pass for an engulfing pattern, but this particular piece of price action right here would have been easily passed for a candlestick engulfing pattern. So why trading order block? You want to put this perspective in mind that these are areas and zones where we previously have buy and sell orders induced into the market only to be mitigated in the future. Just like in this bullish order block scenario, you can see sell candles right here was injected into the marketplace right here. You can see price rally all the way to the buy side only to come down here to mitigate that sell order right there. Same can be seen clearly right here on the daily time frame order block. The sell momentum was induced into the market right here. Price rally came down, mitigated that sell orders right there. You can see price rally all the way to the buy side. So with that out of the way, here are 3 simple steps to trading the order block profitably. First off, you want to identify market structure. Next off, you want to identify inducement. And last of all, you want to focus on a time window. So this can be either the ICT, New York Q zone, London Q zone, or Asian Q zone. So without further ado, let's get into the chart and see examples. So right here on the AUD USD on the 1 hour time frame, we can see this particular piece of price action right here. So looking at price, market structure is currently bullish right now. And from the look of things, we already have an inducement right here. So you can see how price failed to reach for deeper discounts. If we take from this high to this particular low, you can see the 50% level is right here. So price did not reach for deeper discounts. So this move higher right here is an inducement. So going forward, we want to see how price reach for deeper discounts. And in this case, it's going to be this particular bullish order block. So you can see we've identified the high, the open and the mean threshold. So going forward, let's see what price does. So right now we can see how price has reached for this particular order block, piercing through the high and reaching for the open price. And we can see how price rejected all the way from there. So since we're looking at an institutional reference point, in this case, which is a bullish order block, we're going to drop all the way down to the 5 minutes because we've identified this particular rejection on the 1 hour. So that is how you appropriate time frames while framing setups from an institutional reference point like the order block, fair value gap, or liquidity swing point. So right here on the 5 minutes, we can see that we have a very good reaction in price. So you can see how price moved higher, taking out this particular structural high right here. This right here becomes an institutional swing point. If you've not seen my video on market structure, I spoke a lot about using institutional swing point to frame setups. So I'm going to be leaving the link somewhere around this video or in the description. So we want to see how price is going to trade to this institutional swing point or reach for deeper discount, probably like this inversion fair value gap, and target this particular buy side liquidity, which is a swing high. So let's see what price does. So right now we can see how price reacted from this particular institutional swing point. So we can confidently frame our setups from this particular area, aiming for this particular buy side liquidity right here. So let's see what price does. And there you have it. So still on the AUD USD, so this is another piece of price action on the 1 hour. Right here, we can see that market structure is currently bearish right here. And we can see an inducement has already occurred right here, because while price was retracing at this particular area right here, price did not reach for deeper discounts. And you can see that when you use the fib from this low to this particular high right here, you can see right here is the 50% level. So price did not reach for deeper discounts before giving us this push lower, hence making here an inducement. We want to see how price will reach for this particular order block right here. So we've identified the low, open, and main threshold. So let's see what price does. And there you have it. You can see how price reached for this particular low right here, rejected a little, and pierced all the way to the open price. And you can see the rejection from that particular point right there. So we're going to drop down to the 5 minutes to better frame and time our entry. So right here on the 5 minutes, we can see a very good reaction in price right here, as price has given us an inversion fair value gap right here. And you can see how price has retraced all the way to this particular order block right here. And you can see how price has rejected very nicely right there. So this is a very good indication that price can from here on keep pushing all the way to the sell side. So we can confidently frame our setup, putting our stops just above this particular mean threshold, because we don't want to see price defile that particular mean threshold. And we aim for this particular ultimate swing low right here, which is our sell side draw on liquidity. So let's see what price does. And there you have it. So you can see how price delivered nicely all the way from this particular order block to this particular sell side liquidity. So here's another example on AUD/USD, which is gold on the 1 hour. We can see the market structure right here is currently bullish. And right here we have an inducement. You can see price failed to reach for deeper discounts. I believe you already have gotten that drill by now. So going forward, we want to see how price is going to reach for this particular order block, which is this down close candle right here, which is the bullish order block. Let's see what price does. So right now, we can see how price has reached for this particular order block high right there. And you can see how price has given us a good reaction in price. So for the previous examples, I forget to point out the time window element. So for this particular example, we can see that why price was reaching into this particular order block. It aligns with time, which is 2 a.m. New York time, which is also 7 a.m. London time. So that is the ICT kill zone right there. So going forward, we drop down to the lower time frame, which is the 5 minutes, and we can see price has given us an inversion fair value gap right here. You can see how price has traded into that particular inversion fair value gap, also tapping into this fair value gap right here on the right side. You can see how price has given us a good reaction in price on this particular candle. So you can wait for more confirmation, or you can frame your entry from this particular area right here, aiming for this particular buy side liquidity, which is a swing high. And we can also see that price also giving us a market structure shift right here, taking out this particular structure high. So framing our setups, we're going to put our stops just below this particular mean threshold right here to give ourselves a protective stop. And we're going to be aiming for this particular buy side liquidity, which is this ultimate swing high right here. So let's see what price does. And there you have it. So you can see how price delivered from this particular order block all the way to the buy side. So to switch things up a little bit, I want to show that you can actually apply this particular strategy even on other time frames. So right here is the 4 hours on XAU/USD, which is gold. And right here we can see that market structure is actually bullish. And right here we have an inducement right here. As you can see, price failed to reach for deeper discount. So going forward, we want to see how price reach for deeper discount, which is this particular bullish order block right here. So we've outlined the high, the open, and the main threshold. So let's see what price does. So we can see how price has reached for the high of this particular order block and give us a good rejection right there. So now this is the 4 hours. So for time frame appropriation, we're going to drop down to the 15 minutes. So for the 1 hour, we drop down to the 5 minutes. For the 4 hours, we drop down to the 15 minutes. So right here on the 15 minutes, we can see how price give us a good reaction in price, as price has given us an inversion fair value gap right here. And price is giving us a good reaction after taking out this rejection block right here. So you can see this good reaction in price on this particular candle. Now we can frame our entry right here, putting our stops just below this particular mean threshold right here for a protective stops. So our first target can be this particular high, then our ultimate target, this swing high all the way to the buy side. So let's first aim for this particular swing high right here, which is our first draw on liquidity. So let's see what price does. And there you have it. So you can see price has taken out this particular first draw on liquidity. So let's see if price will take out this ultimate draw on liquidity, which is this particular swing high right here. So let's see what price does. and there you have it. So you can see our price took out this particular swing high right here, which is our ultimate draw on liquidity. So these are, you can use order block to frame high profitable and high rewarding trading setups using this particular 3 simple process outlined in this particular video, which are market structure, inducement, and time windows. And just for completeness sake, you can see why this candle pierced into this particular order block high right here. If you check the time window, that is 9 a.m. New York time. You can see it right here on this particular crosshair marker right here. So this will show you that this particular 3 simple steps is all you need. So if you want to be part of my Telegram community where I share trade ideas and insight to the trade I take, posting the before and after of my trades, all you have to do is join with the link in the description. And you can also follow me on Instagram, Facebook, and Twitter. And if you have your thoughts and questions, you can leave them in the comment section. I'll be sure to get back to you. Until next time, see you in more videos.